Hello, Avila Advantage students. We are now in week 4, and actually we'll be halfway done with the course at the end of this week, so things are moving quickly. This week we're going to look at chapters 7, 8, and 9. I put out there some examples for how to do bond calculations relative to the price we pay for a bond and your rate of return and the current yield. And again, the thing to remember is with bond calculations, it's an inverse relationship. So if current rates rise, we should expect that the present value goes down, or the price of these bonds go down. And if current interest rates drop, then the present value, the price we're willing to pay for that bond increases. In fact, when the bond price increases over exceeding the par value, we say that that bond sells at a premium, but if it's below the face value, then that's what we call it as a discount. And generally in the textbooks we use $1,000 as that par value. Things to remember in this chapter, chapter 7.2, is in order to find that coupon payment, what you're doing is you're taking the $1,000 face value multiplied by whatever the stated coupon rate is. So if it's an annualized rate of 7%, you take 1,000 times 0.07 to give you a $70 as a payment. And within the finance textbooks, we assume that the future value when the bond matures is $1,000 unless otherwise stated. So that's a lot of these examples in these textbooks are pretty straightforward and basic, but just remember that when you're doing the calculations and going through that chapter and doing the readings. Chapter 8 is going to look at stock valuation. So you're going to look at some basics theory relative to what I should pay for a stock. You're also going to look at the value of preferred stock. And the reason that we kind of tie these chapters together this week in chapters 7 and 8, Chapter 7 looking at bond valuation and Chapter 8 looking at stock valuation, is because we're going to tie these all together in Chapter 9 when we look at what is the true opportunity cost for the corporation, your firm that you'll be doing a research report on in the final week. And again, Chapter 7 is going to look at the bonds, but Chapter 8 is going to look at a little bit about the capital asset pricing model. What is a required rate of return? And you touched on that a little bit last week with your readings. We're just going to get more detail this week. And then again, in that final Chapter 9, it's kind of like if I have a company that has $100 million worth of market value, 50 million of it is in bonds, 50 million it is in stock. Well, I'm going to find out what is my opportunity cost for investors for stock. I'm going to find out what the opportunity cost is with bonds. And one thing you're going to notice in this chapter is that bonds get a tax advantage because we get to deduct the interest expense. So it actually helps lower that opportunity cost for the investor. And later in the course we'll look at that. That can be a trade-off because as you are taking on more debt, that can be more financial leverage, and your borrowing costs to try to attract that debt may actually go up too. That's something we can examine later. But going back to that example, if I have 50 million here and 50 million here, total value of $100 million in market value, well, let's say the opportunity cost for debt is 6%, and the opportunity cost for stocks is 10%. Well, if I weight 50% on the 6% and 50% on the 10%, well, that would be 3 and 5, so it's saying altogether the opportunity cost for that company would be 8%. So when we look at projects later in this course, it gives the financial manager kind of a benchmark, if you will, that as long as we are exceeding a profit of 8% on any project we take on, it is adding to shareholder value. It doesn't mean that we don't make a profit if I take on a project, but I may take on a project that only pays a 5% return. But if my investors are expecting an 8% rate of return, I should really be taking on projects that are going to give me at least that 8% rate of return. Okay. One thing I want to mention this week, I do have a forum discussion out there for you. Make sure to post by Thursday. What I want you to do is look at that final project. And you're going to, in the forum discussion, let the class know which company you're going to do research on. So if you were to do Kellogg's, you would say, I'm going to do Kellogg's, ticker symbol K. But I want you to find out a little bit about any debt that the company might have. Try to find some information about how much debt they have outstanding, what's the coupon payments on these debts, when does it mature, and then give a little bit of overview about how the stock has done this past year. Anything in the news, anything you want to share, and then just make sure to respond to at least 2 people before Sunday at midnight. So again, we will have some homework questions too, so do email me if you have any questions. Just email me in Canvas, and I'll checking email daily. But otherwise, have a great week. We'll talk to you online soon. Take care.